we hadn't actually really seen that many investors putting risk on assets in. I think we saw a bit of a rotation, and if you look at fixed income, some moves back into high yield, longer duration type exposures. But for the most part, in equities, investors have been buying defensive type proxies, minimum volatility, high dividend type investments, somewhat in technology space that's clearly been impacted by rates moving higher. But also, volumes have been extremely low, right? So there is a real lack of conviction out there. And I think for us, the Fed, Powell's statement, he didn't really tell us that much. So, I think terminal rate is still kind of the same, but the expectation of pivot has now moved out slightly, which is impacting.
All right, let's go into another trade here. As investors continue to study Fed Chair Jerome Powell's comments, another crypto rout is taking place. Bitcoin has fallen below $20,000, dragging the rest of the crypto market down with it, and across the board. So we're showing the cryptocurrency prices there here in the early going, but also seeing pressure under Riot Blockchain, a lot of other crypto exposed names as well, as those Powell comments not only causing a pullback in risk in stocks and in equity markets globally, but also risk assets, highly risky assets such as Bitcoin.
If you've been watching the news and following the market indexes, it is not news anymore how bad the economy is. The equity market continues to struggle to maintain a rally, as every rally has so far been short-lived. This is also the same in the cryptocurrency market. Today, we have Raoul Pal, a renowned macroeconomic analyst and seasoned investor, take us through the global economic situation and opportunities he sees. We're not dwelling on the negativities in this video, but focusing on opportunities that can be capitalized in traditional investments and divergent markets such as cryptocurrencies. If you're new here, please subscribe and turn on the notification bell. We promise you top-notch investment videos only.
We are more correlated to the Western economies that are slowing down fast. So we are seeing, I think we are in a recession, and I think it's actually going to be pretty nasty. The nexus of a strong dollar, the high interest rates, high inflation, means that people don't have as much money to spend, and they're scared. You see the sentiment surveys, and people are scared. So you may not see it from your audience in the Middle East, but you'll see it in the US or the UK. I mean, the UK just announced today that they expect, 5 quarters of recession, and they're still raising rates, and they've got massive inflation. So it's a really ugly situation here in the kind of Western hemisphere right now, and that's not going away for a while. And the other engine of growth, China, is not an engine of growth right now either. So that makes it more difficult to navigate, but you guys are slightly more isolated than we will be here.
Based on statistics from 2021 and projecting to 2025, the fastest growing economies are in Asia and Africa, with India leading the pack with an average GDP growth of 7%. The G7 nations, though, with the largest GDPs, are not growing anywhere near the rate at which developing nations are. Current data from IMF shows that countries such as the United States, United Kingdom, France, Canada, and most of the Western economies are not in the top 40 bracket. This information is not a cause for panic, nor does it mean the economies that are not growing fast are not strong. It only means that their growth has reached the top of the S-curve, and there's not as much growth opportunity as we would find in emerging economies. Investing in startups or businesses operating in these growing economies means having a huge corresponding growth potential. The Bank of England announced that the United Kingdom is likely to enter a recession officially this year. The economic indexes already put the UK in a recessive economy, which is the same situation in the United States, where the Fed continues to live in denial of all indexes. Let's take a break from the bad news for a moment. Is there any good news we can hold on to? Raoul Pal answers this next.
Rather than talk about the negative, let's talk about the positive maybe. For people that are sitting there right now saying, what do I do? I've got some cash. I don't know what to do right now, but could this be an exciting time for me? Where would you steer them?
I would steer them to the two things that have been discounted the most, that have the higher potential upside. It depends what their their objective are, but let's assume they're relatively young and want to make capital gains. If they're relatively young, want to make capital gains, then the two areas that have been massively discounted are both crypto and the kind of very growth end of technology. And why those areas are, they're both in secular uptrends, right? Technology is not going away. The EV revolution is not going away. The autonomous driving is not going away. Space exploration is not going away. AI is not going away. They're accelerating, right? So if you've got this trend of adoption and rising prices over time in the share prices, and you're right at the bottom of that trend, you kind of know that this adoption is going to continue. There's no way that technology doesn't continue. So therefore, it gets incredibly cheap every day. It doesn't go up over time. And a lot of this stuff is down 80%. Things like Shopify or whatever it may be. So that gets really interesting. And crypto's the same. It's even got a faster, steeper curve over time. More and more people are flocking to it. And the prices are down 80%. Well, between 50 and 80%. So these are the times where, let's say there's another potential 50% downside, let's say, because crypto is very volatile. What is the upside? Usually when you get to this kind of oversold levels, so I use stuff like the 5-year moving average, you find that the upside is 10 to 20x. So you've got a 0.5 downside, 10x upside, right? These kind of things don't happen many times in your life. So if you do have a bit of cash, buy what everybody's sold, not what everybody's buying now. And everybody's buying now. If we're talking about Dubai, people are buying property. Okay, that's been a good trade, but is it likely to generate 10x? No chance, never. Well, not in 5 years, not in 10 years, maybe in 20 years. So, or longer.
As experts continue to debate on solutions to the climbing inflation and declining markets, one thing almost every company agrees on is the need to bring in more technological solutions to their operations. A recent CNBC survey revealed that tech organizations all have a plan to spend more on technology. Just as Raoul Pal tweeted, tech companies remain viable in the equity market. EV, AI, and ICT innovators would keep growing as there's no foreseeable end to the demand for better technological solutions. Raoul remains extremely bullish on Bitcoin. He believes the 50% drop in prices we have seen in Bitcoin prices is negligible when compared to the growth potential Bitcoin has. He places his estimation at 10 times to 20 times returns on a long term. Every seasoned investor knows that the best time to buy is when there's a market crash. Do you think Bitcoin has crashed to a risk-on level for buyers? Do you think Bitcoin can reach $200,000 in the next 10 years? Historical price index of Bitcoin proves Raoul Pal right, but can we be certain of history repeating itself? What if you are risk-adverse and you think Bitcoin is too volatile and risky? This is what Raoul Pal's advice is.
If you're risk-adverse, but you still want to make some money out of this, then bonds, which is, everyone's going to go, what? But inflation means that bond prices go down. The point being is we've hit peak inflation. Now, whether the inflation rate stays, headline rate stays sticky for a while longer, most commodities are down 30 to 50% already. We've seen massive inventory builds. So across all of the Western world, we've seen supermarkets with too much goods they ordered. Amazon with too much goods. They're getting rid of workers and they're going to have to start discounting prices. The oil price is now starting to fall. It's just broken $90 as we're speaking. And, I think it comes down to 60. So that will be a 50% fall in the price of oil. So inflation comes down significantly and bonds tend to do well. So they're not very volatile. So you're not going to lose a lot of money. But the chances are, you can make a decent return, not from the yield, but just from the price appreciation. And there's things like TLT, which is an equity ETF that mirrors 20-year bonds in the US. Very simple place to invest, very easy way to do it. So that's the other thing I would think of now as an opportunity, depending where you are in your risk.
The US dollar has outperformed most other currencies and continues strong. Having savings domiciled in US dollars should be safe enough, but Raoul Pal believes that bonds are the safest securities now. What would you be investing in? Leave your thoughts and answer in the comments below. Remember to like and subscribe. See you in our next video. Thank you.